Here at YouFunded's trading floor with Liana, about to run through a trading masterclass here. Liana's absolutely crushing it on YouFunded. And then how well are you doing? How are things going on YouFunded?
It's been going great over the past couple of months. The total P&L is close to 30K.
It's not too bad, is it?
Yeah.
So Liana's got an absolutely amazing knowledge. So I think I'm going to definitely learn a few things here as well. And we're just going to keep it very free flowing and just discuss all things trading. So let's go into it. So you're just discussing there about your sort of entry on lower time frames, trying to catch that like wick. Like talk me through that a bit more. We'll move this over. So you're trying to get those like sniper entries. So I assume you're like marking up levels on a higher time frame, and then when it comes to the lower time frame,
I would mark more levels, kind of like micro levels, but that is more for when I'm monitoring the position to see where it might reject off from, or if it breaks that micro level, it has potentiality to go even higher. So that's how I decide whether to hold my position still or not.
Okay, so when you're already in the position.
Yeah.
Do you ever add to positions?
This is actually a thing you mean like buying more, or if you're shorting?
So you're in a buy position, add buying more. Yeah, exactly.
I've been with YouFunded for like a couple of months only, so a lot of it was like me exploring the platform, how it works. But I was actually looking into that, because why wouldn't you add a position if it's going into your favor?
100%.
Yeah.
So that's really, really good. Something I like to say a lot is a lot of losing traders will add to losing positions. So if we just flip that on its head, winning traders add to winning positions. Yeah. And if you've marked out this level here, you've done all your analysis, everything looks good. You said you enter with candlestick formation patterns.
As confirmation, yeah, but it depends like in correlation. So it would really depend like what's going on the chart. So it can be different aspects, but candle formation as confirmation, not on its own, just as confirmation, because candles can lie. Yeah, they can be deceiving.
Definitely. A lot goes on within those candles, which a lot of people aren't aware of. But yeah, so like adding to a winning position is something that I really, really like. It's like an analogy I gave in there of, if you prove a business idea is correct and it's making money, why not reinvest into that business? And I've just seen it happen a lot when I heard people doing it, very successful traders, and I was like, okay, I'm just gonna try this, like see what goes on, and from there I've never really looked back. So it's something definitely like give it a little bit of a try. Analyze sort of last month's P&L, and then when you try it, and like again we discussed in there, everyone's different, so it might be something which really like levels you up. It might be something that just doesn't really add too much. You never really know. So I think something really cool to try would be, let's just mark up the chart. I just want to see how you mark up the chart from like top down, go all the way down, and we'll see what goes on. So what time frame are you really like starting on? Okay,
I start on 1 hour.
Okay, nice.
I wouldn't really use higher than that because the way I monitor it, I don't really need higher time frames because I would normally only hold my positions intraday. Sometimes swing, but that's very rarely. I normally close my positions within a day.
Do you so when you say swing, I think something really interesting. You don't enter a position for it to like enter a swing position. You'll enter an intraday that could turn into a swing and like naturally develop into a swing.
Yeah, okay. I never force it because market is wild by nature, and there's 100%. Only so much you can do to predict it. I mean, you can't. You just have your system in place and.
100%. I think that's really, really smart though. Letting trades naturally develop into what they can be. Sometimes that's a swing, sometimes it's not. Interesting how you start on the 1 hour. I think that's really nice.
So I would mark out, let's say if I'm looking, this is over a period of a few days actually. I wouldn't.
And why did you mark out this high? I'm just intrigued to see everything.
I would have this in. I like to also change my colors and.
You gotta be creative.
I use because this is like art for me as well. This
Yeah.
is like another.
You seem like a very
creative-
artistic type, which is good.
My background is actually in fashion, so
there you go.
approach it quite differently. So I use these kind of lines so they don't obstruct the view of the chart, but that they're still visible because I'm also using dark mode. So
Yeah.
I marked this out because I'm very visual with this. So I start off like I'm not diving into technicals at first. I literally just use horizontal lines to mark out where the price has bounced off from, or if there's, you know, like this high, low, low, then it's going up again. And here, some kind of resistance, a lot of wicks around here. So I mark this level here where the candles close. So you see it aligns perfectly, these two candles and these two candles.
Yeah.
And then, so there's rejection around this area.
Yeah.
And then, so yeah, main ones, this one.
I'm liking this so far. This looks good. I always say like floors on a house, floors and ceilings of a house.
Yeah.
That's all the chart is.
Yeah. And this looks like, yeah. So, okay, let's see. Because the way the levels I've marked out, especially in the smaller time frames, and the correlation of like how the price moves is like, it seems scientific, like sometimes, because it bounces exactly at those levels that are marked out.
Yeah.
But I've overdone it in the past where, you know, I put too many lines, so it kind of like clouds your view. So then I would clear the chart and start again.
Yeah. Something I like to do is you can put levels in like folders and then like take the folders off and have them on. So I'll like on TradingView you can have like, I have like daily, weekly levels, 4-hour levels, my Fibonacci, everything, and I can like put my Fibonacci on, take my daily off, and then so I've still got them in folders, but I can like hide them or take them off, because I think something really important there is, which you've said, which I think a lot of people do, see this so often, is they over mark up the chart, and then they can't be trading the candlesticks. They're trading every single line. They've got lines here, 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 and a lot of them just they aren't relevant to what they're even doing. And so that's really, really important. I think a great tip is keeping your chart simple, clean, and making it look nice. Like you want to be at the chart. Like you want it to look very nice.
Yeah, and I mean, as long as it makes sense to you, like you can really put as little or as many, you know, drawings as you want.
Very true.
But yeah.
So now you've gone down to which time frame? Sorry.
This is 2 minutes. So.
Is there a reason you use 2 minutes? Like I understand the hour, but like what? 2 minutes is quite a.
It's very extreme, and I know, you know, a lot of people in trading spaces say stay away from 1 minute, stay away from 1 minute. And I was thinking about it. I was like, are you telling me to stay? Well, I didn't tell them directly, but I was thinking to myself, I was like, are you telling me to stay away from 1 minute just because you can't handle it? Because it's very much like,
I like it.
You know, it's even more high pressure than looking at higher time frames, because, you know, every candle, it can tempt you, and it was like, it can start looking like, oh, something is forming, but maybe it's a fake out, like you need to wait a little bit. So this is like, I feel like where I've really mastered my patience, like on 2 minutes, because like, you know, you enter the position and you're literally watching every red, green candle, and there's so many red candles even when it goes green.
Yeah.
So yeah.
I think that's good though. I think when I'm mainly looking for confirmations, not necessarily marking out levels, but looking for confirmations as price is coming to a level, I'll use 1 minute, 3 minute, 5 minute, 6 minute. I think something we spoke about before, but being quite free flowing with it. A lot of people, they want to look for a very specific time frame. What's the golden time frame? Okay, do you just use 5 minute? Do you just use 15 minute? Do you just use 30 minute? And it's like, no, I think of time frames as like a zoom feature. You said something very interesting before. You said on the 2 minute, you see more detail. And it literally is, you zoom in, you drag a slider, you zoom in, you see more detail. You zoom out, you see less detail, but the overall environment which you're in. Yeah, which is really, really, really good. So both do very similar there.
Okay, and that's another thing I kind of remind myself as well, zoom in, zoom out, you know, because there's been times when I enter a really good position, but because of hyper-fixated on one area,
yeah.
I enter it maybe earlier, and because I missed the bit where it still kept the momentum going.
Yeah.
So it's simple but very important, zoom in, zoom out, especially on, because once I mark out my levels, I don't go anywhere but 2 minutes. I would like switch to, let's say, 5 minutes to see maybe, there's something else I can see in the structure that 2 minutes isn't showing me yet.
I think something interesting you did there, you were talking about it and I could see it literally on the chart, is here, if we look at this, if you're hyper fixated on this, you just see lower lows, lower highs, you see price, trending to the downside in the 2 minute. But as soon as you just take it up to the 5 minute, you can see, okay, we've got this huge impulse move to the upside. We've retested this previous high here, huge bounce. Okay, do I really want to be entering sells here now? Like, you don't really have that bias until you take a step back and look at the environment in which you're in.
Yeah.
It's something which I heard early on, and it really, really helped me. It's just look at your environment, look at your environment, look at your environment. Always take a step back. And whenever I'm entering a position, I'll do something which I don't really see too often, is I'll start off and normally the 1 hour, and I'll just go like 1 hour, 30 minute, 15 minute, 5 minute, 1 minute, and just literally, okay, what's going on here? I'm not necessarily looking for something particular, but I'm just analyzing the environment which I'm in. So I'm looking at the 1 hour, okay, what's going on here? Then I look at the 30 minute, what's going on here? Look at the 50 minute. I think doing that before you enter a position will allow you to fully have the broad picture, which I think is really, really good. But talk me through more what you do on the 2 minute now then. So you've got these levels. Are these the only levels which you'd have on, or?
So this is where I would start putting on micro levels, but that depends. So if, let's say right now, so I would mark out, like, let's say, let's just say I was here, like, during this move and when it happened, I would then mark out, okay, where it rejects, where it bounces off. So here's actually very strong rejection. Wicks, and then candle body closes very close to the 1 hour as well. And the reason why I enter on smaller time frames is, again, because, let's say, I can see the price is bouncing off from here, and that's again something like I would look at it and it was like, it's pattern recognition. So I kind of like, okay.
Yeah.
And then instead of, so around here, I would wait till it rejected again. There's some possible support, and again, now it's going a bit higher. So I'm kind of like micro-analyzing this. Okay.
So you basically, like, not to make it mechanical, because we both agree that mechanical isn't really the way to go, but just to confirm, you'd see like a 1 hour level here, then you'd see, okay, big wick, those like big wicks here, those orders are getting absorbed by, huge probably institutions, big people in the market. Those orders are getting absorbed. So you're like, okay, we've got a 1 hour support here. There's clearly a lot of orders, and that's what the market's made up of. There's clearly a lot of orders at that level, which is just absorbing them. So that's telling me, okay, not only have I got a level there, but also clearly some serious people are absorbing those orders there. And then from there, you'd look for sort of, what would you look for then?
Yeah.
So you've highlighted these wicks, they line up with a level. Then would you look for like market structure shifts, or?
So now I would mark this line here. So again, if you look closely, these two again touching more or less, let's say, but like it's almost perfect. It bounced off.
Yeah.
So this is like kind of what it does. If you have support here, and it's kind of like a bit ranging, but it's not like bearish ranging, because there's a difference in the way it looks when it's like going down instead of like, what's the word? Like contracting, no. Like building
momentum.
Building momentum before it goes one way or the other.
Yeah.
So again, this is pattern recognition, and then I would look like, okay, this candle here broke these two previous highs where initially I thought, oh, maybe there's some, resistance, but it's not. And then I would enter right here. well, so I obviously would wait for candle close. The 2 minutes is nothing.
Yeah.
So it closed and I would enter here.
Okay. So you've seen basically this huge bullish engulfing candle.
Yeah.
We've took out that high.
Yeah.
So I think there was a lot of, so from what I've seen, there's a ton of orders here. There's quite a few orders at this level here. But the fact that we've closed above that means that we've took out this orders. So you're anticipating us to basically go on a bit of price discovery mode and look for other areas which we can form these sort of patterns on. And then you're riding that up.
Yeah, so let's say...
Really a bloody nice trade.
If I marked these out here earlier, and then to see if it's really changing the character, because I mean, I've entered very early on. I didn't even wait for it to break this level here. Yeah. So this is what I mean by sniper entries, and hence the smaller time frame, because I don't know, it's like food to my soul, having a sniper entry.
Yeah,
so
makes you feel a bit, and you can increase the risk to reward a lot easier.
Oh yeah.
Your stop is super close.
Oh yeah.
And something which I saw, how institutions basically enter is what they do is they don't really, it's taught throughout loads of trading books and all online to, okay, you highlight a level, then you wait for confirmation. But what institutions do is they don't wait for confirmation.
Oh, no. They
have a level.
Yeah, levels.
And they trade at it. So that's them. That's them right there. Where are they getting in? They're not waiting for confirmation.
Oh, no.
They're seeing their level and they're getting in there. So trying to get as close to that as possible, not waiting for, a lot of people would wait for, this high to be swept here. And although this move, hindsight's 2020, you're missing, you've got in all the way down here and you've missed out on that full, which is so I really like that.
Yeah, why not get in earlier if you see the opportunity? I'm all for it, early. Well, they like early entry, not really, because I don't think you can have an entry that's too early, but I guess earlier than, in comparison to where other traders would get in.
Yeah.
But yeah, and then I start to ride the wave, and then
I think an important, an interesting thing, which I think you were just about to get into, but I'm very intrigued, is you're in that position, where's your stop and how are you managing that trade as we go? Because I think that's something which is incredibly important, how you manage that trade and actually, you're in the trade, that's when the emotions take over, you want to do all these crazy things, this and that. I'm very intrigued in how you're going to manage that and potentially capture that larger move.
Okay, let me... This is my entry, okay?
Okay, I was wondering where you were going with that. I haven't seen... this is the first time I've seen an emoji used on the YouFunded floor.
I use emojis all the time. Well, it's if I want to, maybe make it specific and say, I remember why I put that there, because I like to keep my chart clean, and using emojis is you can put a whole sentence in emoji. But this is just let's say this.
I think make the chart your own. We spoke about it earlier, but keeping trading very free flowing. Don't try and be a robot. Don't try and be this next person.
Because I think being like that, it takes all the fun away from trading, and that's why, because I kept coming back to trading, and obviously, if you haven't blown accounts, how are you even a trader? So we all go through that process. Yeah, it is a tough training school, but it's totally worth it. And I just kept coming back to it, and all these people were making it so complicated, as you mentioned earlier. And I was like, this can't be trading, because I was literally sitting at the chart, and it was just observation time for me, and that's how I learned, through almost self-teaching myself, but at the same time I would pick bits up from everywhere and use that. I was like, oh yeah, I can implement it in my strategy. Oh yeah, I can take that analogy, or it's just things like that. Yeah,
I think it's like you're a kid on Halloween. You go around, you take a bit of stuff out there, but you got your favorite candy at home. That's the one which you've got. I think that's really, really good. I don't think not many people have just gone to someone and got exactly what their system becomes from that one person. They might get the foundations of it, the idea of it, but just trying to mechanically use what someone else uses, they're a completely different person. And something which puts that into perspective, I like to say, is everyone has different upbringings and different relationships with money. You know, someone who grew up in a less well-off household is going to have a different relationship with money and different risk tolerance and everything and mentality when it comes to money than someone who maybe grew up in a wealthier household, but they were more stingent with money. You know, everyone has different upbringings. Definitely. And that all comes out on the chart.
Oh yeah, it's like a mirror. It's beautiful.
It really, really is.
Beautiful.
I'm glad you see the beauty in the charts.
That's why I'm so passionate about it, because it's like at this stage for me, it's like, oh yeah, money is a bonus. I mean, money is nice when you have winning trades, but it's the self-mastery for me now. It's like, how far can I level up with this? Yeah. And it's like, it's not even about gold. It's about, you as a person.
100%. I remember a guy who I used to watch when I first got into trading. He was that guy who would draw crazy stuff on his chart just because he was like, okay, I'm going to see it go in this, and I'm going to draw this. And it was like, if you first watched him, you'd be like, this guy is just an idiot. But then he'd break down, like, if someone asked him a particular very, very, very in-depth question, like super, super, super high level, he'd know it. He knew the high level stuff. He knew the very, 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 like, insanely in-depth trading knowledge. He had that. But what he used to trade was his creative side with the fundamentals and foundations in the background. And I think that's very important, at the chart, allowing yourself to be a bit creative. This is such an important lesson, is not being so mechanical, be a bit more free flowing, let yourself, do what you want at the chart. Yeah. Exactly.
You don't have to be so serious about trading.
Yeah, it's only money.
Just ride the waves.
Just ride the waves, man. Come on, what are you doing?
A bit of serving time. Okay. Yeah. So, so this is the entry here. And then from this point on, so just, it's kind of like, because what can happen, especially in 2 minutes, is decision fatigue. So to avoid that, that's why I mark out these micro levels to see like, oh, okay, it's breaking this here now, broke this, okay, it's going higher. And these red candles here, they don't mean anything.
Yeah.
It's like now at this point, I'm looking at structure. And, depending on maybe how I feel that day, I use these, if I, feel like getting that extra bit of support from the trend lines, I would start like drawing them. And when you don't only draw it, like, for example, and I would make it not blue.
I like the colors.
Yeah, it's very like, not in your face.
Yeah.
You can still see it, but the main focus is on the chart.
Yeah. I think that's really good. Except the alien in the middle, but
Do you like a different emoji? So no?
He's fine.
Okay. And then, so, the price is here already.
Yeah.
And, they normally say, oh, when the market is uptrend, you only need to mark it from the upside. You can, but because I am, deciding in real time whether I'm going to hold this position or not, I would mark it out with trend lines.
And at what point would you decide whether to hold that position? So, like, let's say you're in the position, okay, I assume your stops are below the low or below which
It
low?
actually once I am in the trade and it is gone past my entry point, and because of, if it's already in profit, I would just set my stop loss above my entry.
Okay, nice.
So, but I normally don't use a stop loss anyway. That is like when I, step away from the chart.
Okay. If you're actively monitoring it, then yeah.
So, but other than that, I don't really use stop loss. I would like, it sounds crazy, but if you know what you're doing and you don't let your losses like run.
Yeah, I always like having, I see what you mean. So being at the chart, being able to actively monitor it, that you're there, but I always love the safety blanket of just hard stop. Okay.
Oh yeah.
My idea for this trade, and a lot of people ask, how do you, and I'm intrigued to hear what you think of this, how do you decide where a stop loss goes? How would you describe that to someone? They're saying, okay, where would you put your stop loss? How would you describe that to them?
Well,
let's say you're stepping away from the chart here. Okay, I know it's different for your system because you're very active at the charts.
I would actually, because I entered based on the break of these two mini highs. Like at first it bounced up, but then I broke it. So it's a clear bullish momentum. I would just set it below here, because if it invalidates that point, it means like it's reversing now, possibly, or it's gonna retest it again.
Yeah.
But I'm keeping my losses like very small.
Okay, that's really, really good. I love a tight stop, and I think the way I coming down now. The way I
oh yeah, it's breaking the trend line.
sell. The way I describe it is the point in which your idea is invalidated. That is where your stop goes. If you anticipate it to go up because this high has been broken here, like this high has been broken, you know, you've got a lot of absorption here, then your stop should go below that. That's where your idea has got invalidated. Don't overcomplicate it too much. And something important which you mentioned in there before, which is journaling. If you place, you know, you're entering a ton of trades, you have your stops on, you can see, okay, when I put it here, when my stops are overall here, then they tend to not get hit. When I put them too far away, it seems like I'm missing out on, like I don't need to do that. Normally, if it invalidates this level, it comes down to here anyway. And you get that just from journaling. I think stop loss is one of those things where there isn't like a concrete thing. A lot of people say, you know, put it above the high, put it below the low.
Yeah, I've had
that. Yeah, but a lot of times it's up to you, and you've got to learn over time through entering a lot of trades, journaling those trades, where best stop loss is for you. Because a lot of people will, like yourself, like a tighter stop loss to get that increased risk to reward and, you know, ride that bigger move. But then some people might prefer a lot wider stop loss, and they've got a higher win rate, but, you know, each trade's, you know, not as big, and it completely depends on the person. And so that's really, really important. I like how it's very, your system so far is very personalized, and I think that highlights such an important point which is never really discussed in trading, which is the fact that your system is yours, comes before system. It's your system. And so making it your own, learning when to use your system, when to not use your system, when to stay out of the market, which is obviously as important as staying in the market.
Yeah, I
think it's really, really important. So, okay, let's say, you know, you've entered this position, you've moved up. Like, do you take partials? How much partials are you looking to take? I assume what you're going to say there is it depends on how good it's looking, will depend on how much I'm taking.
That's another thing I've been wanting to try out, because when I enter a trade, I'm like all or nothing. Because let's say when even sometimes when I am at the chart and I am actively observing like how the position moves, I would put my stop loss above my entry anyway. So it's like it's kind of like my philosophy of less profit for bigger profit. So it's not even like you are risking money to get more money. You're like risking less profit to get bigger profit.
Yeah, okay, that makes a lot of sense.
Yeah, so it's that kind of philosophy.
Nice break.
Yeah.
I really like that though. That's really, really, really good. I sort of word it as you're in a position where you can only make money. Imagine you take anyone off the street, anyone on the face of the earth, and you put them in a position, you say, you can only make money. I'd be like, hell yeah. Like, yes, please. But as soon as we put it in relation to trading, it's like, okay, I'm in a position where I could only make money, but like it could tag my stop and I could miss out on more money. It's like, no.
There's no missing out.
No.
Market is always giving, and you know, because the market gives opportunities day in, day out. You know, this is like the fear of missing out. Like
100%.
Because you missed that great opportunity. Don't worry, like there's more to come. It's 100%. Like, you know, it's like infinite millions of more trades you can take.
100%.
If you're gonna live for that long, but
yeah, and all you need is a few to make serious money.
Exactly.
So would you take partials off the positions then? Like, just you're in this position here. I just want to see your full like walk through of, okay, I know the reason you've got into this position now. You know, you've seen this absorption here. You've had this previous 1 hour level. You know, you've seen, okay, this is I think this is a strong level. And then also the big players in the market think it's a strong level, clearly absorbing the orders, evidenced by these wicks here. Then we've found this, you know, small bit of lower time frame sort of fractal resistance here. Okay, when we break above that resistance and close above that, that shows, okay, buyers are really in control here. I'm gonna want to get in that position straight away. Your stop loss is going just below those sort of highs that were broken there, because that's the reason you entered the trade. So it should also be the reason you get out the trade if it's invalidated, which makes perfect sense. So you've got in that position there. So now you're in the position. Just talk me through how you'd ride this position out, if you would ride it out. Like, I'm very intrigued to hear.
So here, I haven't taken partials yet because there was this thing at first where you couldn't.
Okay.
So I think they've optimized the platform. So it's not called you take partials. For example, if I was in a buy, I would just sell a portion.
Yeah, exactly. That's what I mean.
I didn't click it at first. That's how it works, but now I know. So I wanna implement it and see. But for me, it's like when I entered the position, is basically all or nothing.
Okay.
And nothing is like, absolutely nothing is like more profit or less profit.
Okay. So basically, you'd get your stop to just in a bit of profit. So again, it's either all profit or a bit of profit, which is really nice. And then from there, you just ride out the position until what point? Okay,
so let's say.
I think you've definitely got, hearing you're not taking partials. I think you're clearly very good at building up the sort of discretionary / mastery ability at the charts, being able to, use your prior experience to really get the most out of the charts. And I think taking partials gives you another avenue to build up your own mastery in terms of, you can choose, okay, I'm going to take a bit off here, I'm going to take a bit off here. It's a lot more free flowing, which I think suits you a lot.
Okay.
And so getting into using those partials, taking a bit, will be very, very, very helpful, I think. So, yeah.
So, because we were having a conversation, so here, this candle here, this would be the point where I get out because it's engulfing this green candle. So this is where the candle formations sometimes come in, again, not on their own, but it's clearly, rejecting from this point here. So maybe, let's say I'm taking partials. If I wanted to still hold my position, I would take partials here.
Yeah.
So around this level here, because it engulfs the green candle and it's like looking like the rails, so it's rejecting. And the same thing happens when it's that candle formation from the bottom. So if this was on the bottom,
I'm with you.
Yeah, the price would go to the upside rather. But I don't think it's in a downtrend. It's just gonna pull back. It looks like that to me.
Yeah.
But let's say I just wanted this to be a short trade. I would just close off here or take partials, let the rest run, see where if like it can hit these next levels. Ooh. Here, this is like a very micro. I like to mark out my micros because the amount of times it didn't tap like any of that is just like rejected from there, and then it sometimes goes lower. So it's very. I
think a couple of things there. One thing is, you've marked at these sort of like train rails here. This is like the angle on this is super, super high.
Yeah.
The market isn't going to go like that.
Oh yeah.
That's too much.
Oh yeah.
So when you get that pattern. Yeah. In the environment of we've formed, those extreme like higher highs very quickly, I think that makes a lot of sense. And then something else to keep in mind here is you could like have zoomed out here, maybe not on the 15 minute.
Oh, that looks
but
it's a strong bounce.
We've had from this level here,
we've
broke through this with substantial volume, exactly like we did here. So this level, we broke through with substantial volume. What happened? We came, retested it. I showed that level earlier, and then we continued down. Doesn't this look very similar in a way to this. We've broke through with substantial volume, then we've come back up, and this is going to be an important level. You know, we've bounced off that a lot. We've got a nice reaction. There's clearly a lot of orders. We've come back down to that level. We've eaten up the orders. Okay, there's no more orders there. Boom. But because there was a lot of orders there, the big players are clearly interested to some extent at that level. So when we come back up to that level, that's probably going to be a nice area to take profit, which did line up. I mean, imagine how confident you'd be if, and then we've probably got a fib, I assume a fib golden pocket there as well. So yeah, we've got a golden pocket, previous low here. Imagine, you know, you had that level marked up, and then also you had that candlestick formation happen. You'd be insanely confident. I mean, you're already confident in taking partials, but then you'd be very confident. So I guess maybe like zooming out a bit more, and when you're in the position could add that little bit. I mean, you're absolutely like dialed in with everything. We'll go back to the 2 minutes so this doesn't look as crazy. But yeah, absolutely. I mean, taking me through that trade there, you're absolutely dialed in with everything. I mean, that looked really, really nice. It was really smooth, very free flowing. Seemed like it, you know, came really, really naturally. You should do this. And then we saw, you know, as soon as it broke in real time, it dropped down, which is very nice. Which is, you know, really, really good. I do think, you know, just a couple of ways to optimize would be taking partials, which you said you're looking into, which is really nice. I think that could allow you to be a bit more creative, which clearly works for you at the chart. And then second thing is when you're in the position, just like you did to enter the position, what you marked up levels on the 1 hour. To exit the position, keeping in mind those levels, I think you kind of did, but I think that's also good. So when you get into the position, you're looking at the higher time frame, the 1 hour. To get out of the position, looking at that higher time frame, or maybe a midterm time frame like the 30-minute, could be a nice addition as well. I think that'd be really good. So what's going on now? We're booming up.
Yeah, so as I said, I don't think it's reversing. It could be just like a tiny pullback, but sometimes, you know, again, if you're too hyper-focused, this, as I say, it doesn't really mean anything. So you need to, again, look for the whole structure, and this is where I would start. I don't even know if it has a name. It's like starting to just put these lines on as let's say if I was still in a position, to see if it's still expanding. So it's like, see where it's going?
Okay, it's like, I believe it's similar to, it's called a Gann chart.
I think I have heard of that concept.
It's very, very similar. It basically shows.
I didn't even know it yet. But you know, you just
that's brilliant. You know, I think it shows such a high knowledge to be able to see what works on your own and see what works for yourself and implement that. And I think this is very important for anybody to hear is if you see something consistently working, even if you don't know what the name is, you make up your own name, like come up with your own things. There's something which I love to have on my chart, which is, do you know what VWAP is?
No.
Okay, so VWAP is volume weighted average price.
Okay.
It's basically like it's like an EMA, but it basically shows the volume of each day, and it resets at the start of each day. Okay, and something I'd never seen done before was the point where it resets from. That level is normally really strong, but I've never seen anyone talk about it. But I still use that level. And just like you're using those sort of broadening lines, craziness.
It's just kind of like
the Wolverine.
Yeah, track it. And again,
I think it's really good.
Yeah, my first point where I would focus on to see if it breaks this high here, obviously. And then, then I will still, if it breaks, I will still hold it. And then just looking, for the general structure, I would say. Because in a downtrend, your lines would be going like that instead of like that. So it's like a lot of it is purely visual for me.
Okay, then no, that's really, really, that's amazing to hear. It sounds like you're smashing it. So Yeah, the Wolverine. I think you need to coin that term.
Wolverine.
Yeah,
Okay.
the Wolverine at the charts.
Yeah.
I think that is important though. Allowing yourself to like I say be creative, come up with your own concepts. And if you come up with your own concepts, then you are the best at it. I think something important, something which I carry throughout trading and throughout everything is focus on what you're the best at. Focus on what you're uniquely good at. You're uniquely good at using that concept because you came up with it. Therefore, you're an expert on it.
Yeah.
Like, why not? You know what I mean?
Oh, yeah, why not?
Why not use it? So yeah, I think I'm going to go over how I would sort of mark up this chart now, and let me know
Please.
if you're.
Let's get into it.
Yeah, let me know what you think. So I'm going to get rid of your alien.
Yeah.
Let us see him go.
Feel free.
Okay.
Yeah.
let's get rid of that. I might keep a few.
Oh, nice. Yeah. A
Maybe.
little. No.
I'll keep it.
I'll keep one.
I'll keep a
Later.
remembrance one. We'll keep that one.
Yeah, okay.
Okay. So I like to start off on higher time frame, like 1 hour / 4 hour, and just sort of see what's going on. So look at this. I don't know what this is.
That wasn't mine.
So I like to, given this price action here, I'll zoom out into the 4 hour. Again, very, very fluid with what's going on. And I just like to see what's overall going on. So overall, we've had a huge impulse move to the upside, forming a nice range here. So what I can do there is I can pull a fixed volume profile across this range here. Have you used fixed volume range profiles before?
No, I have barely used any indicators. So.
Okay. So what this basically shows is volume, where the volume sits on the chart.
Okay.
So you can see the point of control is where the most volume was transacted. And then you can see these like volume spikes. When we get these volume spikes, we tend to get reaction. You can see how strong the point of control is like every single time. It's really, really strong. So this just gives me a framework to work from, which I really like.
Okay.
I normally make it not that visible though. Histogram, I'll make it like 1%, just so I can see it a little bit. Okay, and then I'll mark up a few trend lines. Just again, kind of free flowing, like you. I like this one here. That's quite nice. And then we can also see, okay, we've got this pattern here. We can sort of anticipate, okay, we've taken out this high, potentially move down to this trend line now. That would make sense. A lot of times, what I like to do is I like to think, okay, does that make sense to me? Like, are we just gonna go boom now? Okay, that doesn't really make sense. We can sort of process of elimination of what sort of makes a bit of sense, and so if I saw this, it's not unreasonable. I think you kind of touched on it before, and I think it's very important, is not forcing price to do anything unreasonable. Like, I don't want price to have to go out of its way. Okay, if price wakes up and its morning routine is to go brush its teeth, have a glass of milk and get in the car, okay, I don't want to get in the way of that.
Yeah.
Okay, I just want to bet on it doing that. And so not getting in the way of price, letting it do its thing, and being like, okay, it's not unreasonable that price will probably do this. You never want to force anything out of price. You want to take what it gives you, okay? And I think you share that very similarly. So just a bit of analysis, higher time frame, volume profile, trend lines, and just overall, I'm seeing what's going on. Okay, looks good. Then I'll go down to like normally the 1 hour, and again, see what's going on. Maybe mark up like a higher time frame, fib level or something. Okay, we've taken out this high now. Again, probably anticipate us coming down to here. We have got this nice high, which we have reacted off very nicely here. That's something to keep in mind. We have also got a nice trend line here. I think this looks very similar. It wouldn't be unreasonable for price to form something in here and then drop down to here. That to me doesn't look unreasonable. That's fine. So just making little plans of what I think's gonna come to it. I think you touched on it before, I don't think I'm a very artistic person, I don't know, but being a bit creative at the chart. I think it's really important. It's really, really important.
Absolutely.
So we've got a nice trend line there on the 1 hour. I think I might mark up, see where any fibs line up. So Okay, this is a beautiful level here. So I'll get rid of the 0.786. So this is, are you familiar with like Fibonacci?
Yeah.
Okay, cool. So this is the 0.618, 0.786 level. How I describe this to people who are new, and the reason it's strong, like obviously just a random 0.618 retracement, like what the hell is that? What the hell is that? And I think, so there's two ways I really explain why they're strong, which I think is important to know a little bit why. You don't have to know why, but it helps me. It helps me in the market. So one thing is if we have a 61.8% retracement in price, that is a likely place. That shows a nice retracement. So this is how, if it's someone who's really beginner, I'll just say, it basically shows a nice retracement, because otherwise I don't want to be getting in at the top, like at the tops of these moves. I want to be getting in at nice retracements. This to me shows a nice retracement. And then if we think about it in terms of sort of like economics, we can see a bell curve here. And this is where price most likely gets a reaction. So if price is, we'll use an uptrend, if price is bullish, the last point in which it's likely for price to get a reaction comes here, which is like the 0.6, oh, my drawings aren't as nice as yours, the 0.618. So most reactions come between like the 0.5 and the 0.618. Once we get over that curve, you can see it drops a lot. And bell curves are all over everything finance. So that's how I like to think of it. It's kind of like the last hurrah. Sounds a nice retracement. If we go beyond that point, chances are we're not having a nice retracement. We're either entering a range, we're not continuing the trend, or just some nasty businesses going on, basically. So
don't wanna get in that business.
No, I definitely don't.
Stay out.
Yeah, keep it nice and clean. Okay, let's get rid of these. Okay, so that's one part of it, but I'm not just going to use that area which is a nice retracement. I want to find confluence. Do you know what confluence is?
Can you define it for me?
Basically, where a lot of things line up with each other.
Right.
So if
oh yes.
if I've got a door, okay, you ready for this? I told you I was going to pull out analogies, but if I've got one door. Okay, if I run into that door, I reckon I'll get through it. Yeah, I'm confident in myself. But if we stack a bunch of doors there, I mean, I'm probably going to run into that door and hurt my head a little bit, okay? And that's exactly what confluence is. Instead of seeing, okay, we've just got one door there, I can probably run through one door. Right. But if we've got that door, then another door, then another door, we ain't getting through that door. Like that's a tough door to get through.
Yeah, I like that, yeah.
And that's how I think about things.
I like that.
And so we've got the Fibonacci, that's one door. We can get through that. Okay, we might get a bounce, but we can get through that. But then also what I'm seeing here is these previous highs here, very similar to what you had. And I can see, okay, we've got this high here, and then we did still get a bit of reaction here. This to me, this area here to me shows, okay, big institutions had a lot of orders there, okay? They were struggling to get past this level. How I think about it is, I did give this analogy last time I was here, and I'm gonna bring it out again. So I think taking things away from trading, so trading creates emotion, so taking things as far away from trading as possible, so then you can't get emotional about it, I think is a good way to talk about things. So how I like to think about it is, imagine this level here is a lot of food. Okay, and imagine we've got like a village down here. Okay, everyone goes up, and let's say we got like 10,000 pies or something like this. Okay, we go up, we eat a lot of the pie. Okay, we're full, we come back. Okay, we go up, we eat a lot of the pie. Okay, then we come back down. Okay, we go up. Okay, well, we've eaten all the pie. There's no pie left. What do? They run to the next area where there's pie. Okay, so it's just like, okay, there's a lot of pies. Okay. And then when we come back down to this area, let's say the village wants to go on a bit of an exploration. When we come back down to this area, okay, we've eaten pie here before, chances are we'll find a few leftover pies, like, you know what I mean? We'll find a few left over. So it's like, okay, chances are we'll stay there for a little bit. We're not just going to wander straight through, you know? You're not just going to wander straight through that area. I think, being a bit, like we said before, a bit creative is always good. So these previous highs here, basically big institutions have got a lot of orders. As soon as highlighted by this huge candle here, as soon as we ran out of orders there, price just jumped to the upside. Okay, so when we come back to this area, the pie, I expect us to chill there, eat a bit of pie, absorb a bit of orders. Okay, so that's another area of confluence with that golden pocket. So I'm like, okay, I've not just got a golden pocket. It's not just a nice area of retracement, but also it's an area which the big guys are interested in. Okay, so and then I look for other confluences as well, but those two I'm very confident in, because then I'd normally just mark up a little bit of a rectangle. We've also got this trend line here, which is nice, and I'd normally like label it. So that's like a higher time frame level. So nice buy level, and then as we come down to the level, what I'll look for is I look for like volume divergences, momentum divergences, and things like this. So I do normally have a momentum oscillator on my chart. I'd like to hear your opinion on indicators. My opinion is they show you what's already on the chart in an easier to read format for you. So again, indicators show you nothing new. They just show you price action in a maybe more clearly readable format for you. I'm intrigued to hear your thoughts on indicators as a whole.
Well, for me personally, I've tried a few indicators.
Which ones, if you don't mind me?
See, it's been that long because I've been trading without indicators like for the longest time.
Good.
I don't touch them at all.
Good.
But yeah, like you said, they can help you to see things on the chart you might miss in a more readable way too. But I feel like I don't need them, and they just complicate things for me because I'm very much into my,
like market structure, candles.
Yeah.
I mean, those candles, you're seeing like a bullish engulfing candle. That's probably like a MACD cross or an RSI thing. Like everyone probably is looking to get in at that level. It's just that because you've looked at the candlesticks, you're getting in before those people who are waiting for that indicator to confirm.
Yeah.
Like exactly like you said before, that high that we that we looked at, and a lot of people would look to get in after that high. They're so late to that position.
Oh, yeah.
You've already got in because you've saw the candlesticks, what the actual price is doing. You already got in at that level. They're waiting for whatever cross, whatever this, whatever that, and they're late to the position. They've missed half the position, which obviously isn't good. But what I do is I wait for momentum to be heading to the upside as price is heading to the downside, forming a divergence. So if volume is going up, momentum's going up, normally I've got an indicator here. But if they're heading to the up and price is coming down, I'm like, okay, there's clearly a discrepancy here, and so as we're forming those divergences into an area which I really like, then I'm like, okay, we're probably going to see a nice reaction there. And then I'll look for candlesticks. I'll look for like absorption as well, so like big wicks and everything like that. And then look to enter the position, either mark entry, but I do actually limit entry a lot as well. So I'll wait for a big candle into that level and then mark up like exactly like you do on like the lower time frame, like a lower time frame level, like a golden pocket or just a previous support, and get in at that retest before we continue up. So very similar. So I like this higher time frame level here, and then I'll zoom in. I normally use between the 15 and 30 minute normally, and something which I really like, which you didn't mark up, but I'm pretty sure you saw it, was this trend here. We're coming to the downside heavily, and I think this is an important sort of channel to have on. Obviously we've gone up to this channel in a huge sort of bullish fashion, a lot of buying pressure to the upside, and then we've formed this channel on the downside. This is kind of telling me, okay, we're slowly forming buy pressure, like we're coming down and we're forming buy pressure. I see this to me looks like a further move to the upside. Which looks good. I would have been very interested in this here because I assume this probably lined up with, okay, we haven't hit that yet. I'm very fluid with golden pockets as well. I think a large thing which comes from us talking is being very fluid at the charts. So especially with the pie one. I don't know that one was a bit off the cuff.
That was good though.
with golden pockets, a lot of people ask, okay, but which high and which low do I pull from? It's like, I'm just going to look. I'm going to pull it. I'm going to go from this high to this low, and I did have this. I did have this marked up in my group last night, and so purely because lined up with this previous high here, exactly like this one does with these previous highs, which was very nice. But I'll just pull it. I'll be like, okay, does that look good? Okay, it lines up there. Okay, nice. Okay, what about down here? What does this line up with? Okay, we do have this sort of like, you can call it order block, whatever. We've shot through this zone. We've clearly formed nice resistance on here. Okay, nice bounce. And then we'll continue to pull that down. I think this is the nicest one. From this low here to this high, we line up with these these previous highs here, which is very nice. And then I think the previous daily open, that's something that I always have in my chart as well. I look for previous daily open, the current daily open, previous day high, previous day low. I just like to have them on the chart. Everyone knows they're there, and I think it gives you a nice framework to look from. So then I'd have this level on as well. And my levels aren't getting hit like every day. You know, maybe I'll get like 3 to 5 nice levels a week that are hit, and I'm completely fine with that.
Nice.
Completely. Oh, how many trades do you reckon you're entering a week? Let's say. I know it will change a lot.
Yeah,
but like
I feel like because I went from being a scalper actually to holding my positions like longer, like intraday.
Yeah.
Because I figured, and I thought like I was the opposite. I was like, yeah, scalping is my thing, but it wasn't. It's like I'm the complete opposite. I like to hold the positions.
Yeah.
Sorry, what was it?
Well, how many trades are you looking
How many
to
trades?
Yeah, like a week, a month, like.
A week, I would say anywhere from 3 to 10. It really depends on the kind of trades I take as well. But I don't go crazy with trades. It again depends, you know, what the market gives.
I'd be very, very, very intrigued to see what your P&L looks like week to week on the weeks where you trade sort of 6 to 10 trades and the week where you trade 3 to 5. Because from what I've seen before, just less trades equals more profit.
This is the paradox of trading.
Yeah, literally.
I'm like coming to like more realization every day that, well, this is the paradox of trading. It's like it doesn't make sense psychologically, but this is the way.
Yeah.
So and it's crazy. It's like I'm doing less, but I'm getting more.
Yeah,
it's fantastic.
I mean, when you think about it, it's like, okay, I do less work, I earn more. Like it's throughout, like just like I said before, how we're conditioned with money throughout our upbringing. You know, through jobs when you're younger and seeing, you know, your parents work and everything like this, you're conditioned to believe, especially if you grow up in like a hard-working household, more work equals more money.
Yeah.
But then that's just, you know, that couldn't be further from the case.
Yeah.
You know, if you're at the charts like 24/7 entering 1 million positions a week, like I see people
that's
all the time,
insane.
and they're entering like 30 to 50 trades a week. I'm like, what? That is crazy. And then the biggest earners I see are entering like 8 to 15 a month, really. And so, yeah, just less trades, more profit. I'd be very, very intrigued to see how you handle those higher amounts of trades, and if it is even like cost effective for you, like time effective for you to really be looking at those extra trades. I'm very curious how that looks like. But so we got this like 1 hour level here, very intrigued in that. This level here, very intrigued in that. And then we can even go one step lower and go to the 5 minute. And see what's going on here. I don't really want to be looking for sell positions here, because if we break this trend line, we'll probably see quite a lot of volume as we move up. But we could, this previous lows here, previous high here, previous high here. I imagine if something lines up with that, I'd want to catch it. This doesn't line up as nice as I thought. Over there, this is interesting. I'd probably leave that. I think if we broke this, we could see an influx to the upside. And if we didn't, it doesn't really matter. So what I'd really be looking for here is, and again, gold can, I mean, this move happened in like, I don't know, 30 minutes. We can come down here within the next hour very easily. And then I'd look to enter this position here. And then from there, I'd probably put my stop. I mean, it really depends, probably somewhere in these, depending on where my entry was, somewhere under these candle bodies here. But again, seeing how price formed as I entered the position. And then something which I spoke about earlier is as price moves up, I like to take partials. I'm very fluid with that. I never, like, ever close a full position. It's just like, I just don't do it. And so what I'll do is I'll just be like, okay, I'll close a little bit here, close a little bit here. Okay, we're hitting this previous high here. And like you do, I'll mark up as the trades go in, look for previous levels. Okay, we'll take a bit off here, take a bit off here, and then just keep riding the move. Nice. And then sometimes it'll,
sometimes it just keeps going.
Keeps going, and look, I'm all for it. And
that's the beauty. I think that's the beauty of like if you take partials and you leave the rest of the position to run, like you might be in for something good, some special pie.
For me personally, my trades, like last month, 2 of the trades made up like 60% of the profit, purely because they were just huge trades, and they just make it up. And I feel like that's a good way to look at trading. A lot of people think, okay, on average, each trade is going to make me, this much. My expectancy on the trade is, like, let's say 50% of risk. So I'm expected on each trade I enter to make, if I'm risking £100 in each trade, over time, I'm expected to make £50 in each trade I enter, my expectancy on the trade. I think looking at in terms of, okay, overall, like we said in there, the war analogy, overall, I want to just survive. And then occasionally, there'll be those huge opportunities. And I want to let those opportunities breathe. I want to, give those opportunities whatever they need to grow and survive and just and take over. And then those positions will really just take off. The rest of the month, the rest of the year, whatever, is very like slight profit. And then a few of those positions which you let ride, just take it into the stratosphere. And then averagely, it's like, okay, on average, you're hitting like a 1 to 3, 1 to 4 risk reward. Wow, that looks amazing. But no, most of the trades are a lot smaller than that. It's just a few of them go parabolic.
It's kind of like equals out, like it spreads across all the trades. So I know what you mean.
So to finish up, I think with, you've gone over how you would analyze the charts. I've gone over how I'd analyze the charts. I think it's some really, really good high level knowledge in there, like really, really nice. And I think some main things that I can definitely extrapolate from that is being more creative at the charts, not being as mechanical robot at the charts, letting things be a bit more free-flowing, and allowing your discretionary ability as a person to form your strategy, not trying to be Dave, John, and Mick, not trying to be those, trying to be yourself, and coming up with what works for you. That's very important. So that's something that I really, really like take from this. And then I'd like to hear, like, what would you say to someone who was starting off trading? They wanted to be able to mark up charts like me and you have just done. They wanted to be able to have that knowledge and view charts like that. What would you say to that person? What would you say to them? They're brand new to trading, maybe they've got a good bit of a foundation knowledge. What would you say?
The one thing I would say, if you're in it long term, there's no shortcuts. So my best advice would be actively trade, observe, price action, try different things, see what works for you. As you said, don't try to be somebody else, be yourself when you trade. Because, trading, is like a mirror in a way. So it's going to reflect all of those things back to you. Because it's not you versus the market, it's you versus you. Because 100%. Market did nothing wrong. It's just there, being wild as it always has been. But definitely chart time. If you're in it for a long time, chart time, definitely your own experience at the charts is what will build, your edge, and you'll understand what works for you and what doesn't.
I completely agree. Last thing to touch on, I think, which is the most important, is, like you said there, accountability. Like this, it's exactly like a game of chess. You know, if you lose, it's no one else's fault.
Yeah.
It's your fault. Okay, you need to analyze and touch on what you said in there. Journal, see where you went wrong, and you can go wrong a lot and still profit over time. There's nothing wrong with being wrong.
Absolutely.
So taking full accountability and just forming your edge over time and making some good money. So that was a brilliant little masterclass there. I learned a lot. I hope you had a good time as well. I think it was
a good time.
I'm glad to hear. I think it was really, really good. Definitely a bit of a higher level of knowledge there, but some great tidbits to pick up. And I think being, looking over the shoulder as we're going over this is very important. A great saying is you are the sum of the 5 people you're around, but that can be people online. So if you're here with us and you're sitting in with us, then you're right here, you can pick up some great things, and hopefully a few of those concepts which we went over really do rub off on you. And yeah, absolutely amazing. It was a pleasure. Absolute pleasure.
Likewise.